Guys, in today's video, we're talking about index fund investing. So on this channel, I talk about investing in stocks. And while stocks are, in my opinion, one of the best ways to grow your wealth, it's a lot of value in index time to do the research, or instead of owning individual stocks, you want to own the entire market. So before I go into this review that I'm going to be talking about, which is the Fidelity Zero Total Index Fund, which is an index fund that you can invest completely for free through Fidelity. There are no expense ratio fees. I just want to share some insights from Warren Buffett. So I found an article on Business Insider. It says Warren Buffett thinks index funds are the best way for everyday investors to grow them. And as you can see here, it says Buffett is a huge fan of Vanguard, the creator of index funds for simple, low-cost options and high-performing options. And it says, my regular recommendation has been a low-cost S&P 500 index fund. Buffett wrote in his 2016 Berkshire Hathaway shareholder letter. So basically, a low-cost index fund is the most liquidity investment for the great majority of investors. By periodically investing in an index fund, the know-nothing investor can actually outperform most investment professionals. So guys, so in this article, Buffett is talking about the Vanguard index fund. He recommends that. And so one of the things about the Vanguard index fund, that they have a Vanguard total stock market fund. And I'm going to show you guys what he's about. So the fund that Buffett is talking about in the article is the Vanguard Total Stock Market Index Fund shares, ticker symbol VTSMX. But you need a minimum of $3,000 to invest in this fund. It's actually currently closed to new investors. They also have the fund available as an ETF as well. And one of the reasons why it's so popular is that the expense ratio is 0.14%, so very cheap. So what I'm going to show you guys, I'm going to show you an actually cheaper index fund. And when I say cheaper, I mean 100% free that I use to invest. So I have a bunch of stocks in my retirement account, but I also have some index funds because I wanted to just track the performance and compare and see whether I'm doing better as an individual investor or whether the index fund is outperforming. And that fund is the Fidelity Zero Total Market Index Fund. So this fund is just recently launched back in 2018. And so far, the fund is doing quite well over the last year. It's up actually 31%. So what this fund does is basically you need a Fidelity account to invest in this fund. And basically, you can simply add distributions as often as you like. And as you can see here, the top 10 holdings of this fund are Microsoft, Apple, Amazon, Facebook, Berkshire Hathaway, JP Morgan, Google, Johnson & Johnson, and Procter & Gamble. So guys, this is kind of a really easy set it and forget it way to invest. And what this says is that this fund seeks to provide investment results that correspond to the total return of the broad range of U.S. stocks. So basically what this does is instead of buying individual stocks, you're buying the entire market. So if you don't have a lot of time to do research, you don't have time to read quarterly reports, you don't have time to go over the management and how the products and services are going of a company, you can simply own the entire market. So that's kind of what Warren Buffett is talking about when he says the power of index fund investing. And I have actually invested in this. I don't have too many shares of this. Like I said, it's only a small portion of my portfolio. But what I like about it is that there's no fees. So it's very cheap. There's no fees you have to incur to invest in this fund. So it's really easy to get set up. All you have to do is go to fidelity.com and open an account. And then you can open either an IRA account if you're doing it for retirement. If you want to have an individual account, simply own an individual account. And the ticker symbol is FZROX. So a really nice fund, guys. And the thing I like about it is that the fund just recently started, so it's less than 2 years old as of recording this video, which means we should have a lot of room to run in the future. And it doesn't have an investment minimum like Vanguard does. One of the things I don't like about Vanguard is that they require you for a lot of their funds to have a minimum investment, and sometimes I just like to dip my toe into these types of index funds. I'll usually have most of my funds invested in stocks, but I like the alternative of index funds, and I just want to see if I can beat the index fund basically. Because for a lot of people, because so much of investing is controlling your emotions, you're going to do a lot better just simply buying an index fund, and instead of focusing on which stocks to pick, just putting as much money into the index fund. Because while we are going to have to do with swings in the short term, in the long run, as long as American business is doing well, then the market will correspond that. So you do pretty well with an index fund as well. And as you can see, throughout the entire life of the fund, you've been up 11%, which is basically what you're going to get from owning something like the S&P 500. Now, of course, we've seen a lot of stocks like Apple and things like that skyrocket. But like I said, guys, this is an opportunity to own the entire market, not just one segment. So as you can see here, this is a hypothetical growth of $10,000. If you invested $10,000 into this fund, as of right now, as of recording this video, you would have about $11,500. So not crazy gains, but like I said, it's better. The most important thing is have as much time into the market as possible. So you want to maximize time into the market. And like I said, guys, I really like this fund. I think it's very nice, and it's free. So I really thank Fidelity for introducing free index funds to the public. I think this will force other brokerage companies like Merrill Lynch and TD Ameritrade and Vanguard to really reconsider their fees, because as Robinhood revolutionized free stock trades, Fidelity is revolutionizing free index funds. So perhaps in the long term, guys, we're going to be seeing basically free investing across the board. These companies, they're making a lot of money holding on to your cash and loaning it out and earning interest on it. So it really makes sense for them to minimize as much fees as possible, to maximize as much cash as they can get into their accounts, because there's lots of different ways that they can make money off of those high cash balances instead of charging fees to investors. So that's it for this review, guys. Very nice fund, and I'm going to be showing you guys some of my performance over time. But as you can see here, I want to just lastly go over some of the cumulative returns. So if you, for the last year to date, it's 31% of last year, 2.99% of the last month, 9% of the last 3 months, and 10%. So like I said, guys, it's very simple, set it and forget it way to invest in the entire stock market. So if you guys like this video, please subscribe to my channel, smash the subscribe button. It really helps me, guys. Helps me create more content and figure out exactly what you guys want to watch. And also be sure to give me a like and smash that like button if you enjoyed this content. And tell me what you think about this. Are you interested in Fidelity free index funds? What funds do you prefer? Just let me know what you guys think, and this is total. So that's it for now, guys. Take care and enjoy the weekend.